Welcome. I've designed a game-changing trading system that I need to show you guys. This is my take on the Dr. Alexander Elder triple screen trading system, but this is the Trade Pro double screen trading system utilizing daily momentum combined with 4-hour momentum pivots. So I'm going to break down every piece of this, go through a ton of examples. This is going to be a long video, but I guarantee you will not be disappointed in this one. It's game changing, especially if you are break even or a losing trader. You're going to want to listen in on this one. And the system is simple. It's easy to follow. Pretty much anyone can utilize this. So if you want to capture moves like this with a 1 to 37 risk to reward ratio, 1 to 20, 1 to 20, 1 to 10, 1 to 8.7, and so many more amazing setups, I'm going to go through every single one of these, explain it all to you so it all makes sense. Don't want to miss this one. Quick little cut in here to say that I just finished testing this strategy, 100 back-tested trades. So you can see all my risk to reward ratio tools in here, and the results were incredible. This is the best and most profitable strategy that I've tested out of anything on the strategy ranking spreadsheet by quite a long shot. And so I will make a separate video doing the 100 tests. Make sure you guys stick around through this video, learn it, and also understand that just because the way I'm showing you works really well doesn't mean you can't improve it. This is a pretty basic version, so you guys can add in other things. It's fine. You can use different indicators for the momentum. That's also fine. And so just take the whole concept and make it your own, or you can run with what I've shown here and do some more testing and just build some confidence in the system yourself. But anyway, back to the regular scheduled programming. Before getting into all of the details, I do want to give a shout out to my affiliate exchanges. I just recently partnered with an exchange called Bitunix, and they allow US customers. So finally, I have an affiliate that allows US customers. They set me up with an exclusive limited time event going until July 31st, where new users who make deposits can get bonuses. So check this out with my link in the description. BingX was also nice enough to set me up with a limited time event as well. So all of these deposit bonuses up to 7,100 USDT. And so if you deposit $5,000, then you're going to get not only this reward, but this one, and this one. So each one that you deposit, let's say you do 10,000, you're getting the 1,000 bonus, but you also get the 500, the 300, the 200, and the 100 for all the lesser deposit bonuses. So you can get up to 7,100 just by making a deposit on the exchange. Just read all the terms and conditions here. Use my link to be eligible for this event down in my description. So those are my affiliates. I also have an affiliate for Bybit. They don't have an event for me right now, so that's why I'm shouting out Bitunix and BingX Exchange. Now, let's break down this trading system. I said it's kind of my take on the triple screen trading system by Dr. Alexander Elder, but it's the Trade Pro two-screen trading method. So we have the daily time frame chart here with the TCI momentum indicator. This is a Trade Pro exclusive indicator. You can use other momentum indicators, but those of you who have this indicator, it's called the Trade Pro TCI plus BOP indicator. And I'll show you the settings here. To momentum TCI line, and I've gotten rid of everything else. All we're gonna need is that daily momentum and our 4-hour, which I've done the same thing too in the settings. TCI line, settings are default. So this can be utilized with other indicators. This is one of my indicators that is offered on my Patreon, but you can use other momentum indicators as well with slightly different results, but pretty similar results. Okay, so it's not going to be a make it or break it type of scenario just based on the indicator, but for me, this is the setup that I am taking a look at here. So let's break down what are these green boxes, what are the actual signals, what's this strategy, why is it so good? So we have our daily momentum on this left chart, and the green boxes that I have on this 4-hour chart represent times where momentum of the daily is going to the upside on close. Okay, so we don't start looking for upwards momentum on the daily until we have a pivot on our momentum going towards the upside. So momentum is going towards the upside. That's when I put these green boxes on. and it has to be on close. So that daily candle does need to close, confirming the momentum pivot. And what is a momentum pivot? Well, it's any time that we go from either going to the upside and then falling, or we go from falling to rising on the momentum. So that's a pivot right there. We go down and then up. That's a pivot. So we look for those pivots on the daily and then keep trading in that direction until we get a confirmed pivot in the opposite direction. So these green boxes represent when momentum is rising on the daily, and the red boxes represent when momentum is falling on the daily time frame. Okay, so we have, that's it for the daily time frame. Momentum falling, red box; momentum rising, green box. And it's confirmed upon daily close. Okay, that's important. So I've put these boxes on the actual close where we can confirm that the momentum is to the upside on the daily with our TCI momentum indicator. Okay, and then for the actual entry trigger, first of all, we have that daily filter for which direction we're going to be looking for trades in. And then we're going to be looking for pivots on our 4 hour, but only in the direction of our daily momentum. So anything in this green box, we're looking for only longs using pivots on this 4 hour momentum. Okay, so we have pivots. I've put these green arrows and I'll put them down on this indicator. So a valid long would be a close with a pivot to the upside here. That's a valid long right here on this candle. It's a valid long right there. We have another pivot on close right here. So you can see if we put that down onto our indicator here, valid pivot to the upside, it's a long signal. And then we have another long signal here. And how do I get these insane risk to reward ratios? All of these are valid long signals, by the way. You can see we have long signal here, pivot right here on our momentum. We're in the green. Long signal here, long signal here. So you can see we have a bunch of long signals, right? And majority of these are at a minimum break even, if not winners, maybe some small losses, but our momentum is shifting to the upside. Now, how do we get a setup like this? Okay, so what's the strategy for these 20 to 1, these 30 to 1s? And just this system alone, just this style of entry on these pivots is good enough for a complete system that will be profitable. So check this out. We get a pivot. So we go from falling on momentum, right, to rising. Right here, we get the pivot on this green candle. Upon close, we look for entry on that next candle opening. We want to get in at least as good of the closing price, if not better. So on a little drawdown of that, it's okay. So let's assume we just enter right on the candle close that confirms the pivot to the upside. We have our green, so we're only looking for longs. We're looking for momentum to continue higher. We don't want to see the candle that caused the upwards pivot to get broken down, okay? So that's our stop loss. And then we're going to keep holding this position until we get a pivot to the downside on the 4 hour. So that happens over here, which is all the way to the upside here. And that is how this crazy risk to reward ratio happened. Okay, so that was the strategy. Upwards pivot, pivot to the upside, green, daily momentum. And then we look to only close once our momentum starts shifting to the downside. We get a pivot to the downside on our 4 hour, which happens on close with this red candle. Okay, so that's the trade right there. And then we have valid entries here. Here, let's take a look here. Pivot up right there on this candle. And so you say, okay, some of these might not be perfect, but let's take a look at ones that don't work out quite as well. So let's just assume we have the worst entry possible right on the close of our pivot. Oh no, our pivot is here. A little bit sooner than I thought. Okay, so it's this candle. We pivot to the upside. So on close there, and we just want to see that the low of that candle, which caused the pivot, holds, okay? And then we want to wait until we start seeing momentum shift. So that happens on this green candle. So even a trade like this that may not look as good, still get a 1 to 2.35 risk to reward ratio, right? So this one here, we get this pivot right there, falling to rising. This is our candle that we'd be looking to enter on. So let's say we got the worst possible price. We never end up getting stopped out, but we do see that momentum shifts. So we'd take a break even. That would be a break even right there, because we have the shift happening right here on this candle, which is just basically a break even, if not slightly in profit, if you're getting in on the first little pullback after our confirmation candle to go long. So if you longed on this red candle, you're looking to just close it on this one because we didn't get the follow through we were looking for. We got that pivot to the downside right here. So we go up again. And so we could get long on this candle, right? So let's just say we get the worst possible price for entry. We don't wait for a little bit of a drop here to get our limit order filled. So worst possible price for entry with this signal. And then we get right on that next candle, momentum shifts to the downside again. Small profit. So the ones that don't turn into high flyers are often just break even or small profits, or even a 1 to 2 risk to reward ratio, 1 to 3 risk to reward ratio, something along those lines. Okay. So let's go back, take a look at some of these other signals. So we have green momentum to the upside on the daily. Remember, green box. So we get a first signal right here. So daily momentum to the upside. Here's our pivot right there, 4-hour pivot to the upside. So we can take an entry. We're just looking for continuation. Let's assume the worst possible entry. So not even getting a limit order filled, a little lower on that candle, but at least at the closing of that candle that caused the pivot. We don't want to see it lower than that candle that caused the pivot, right? And then we wait till our momentum shifts, which happens right up here. And this gives us 1 to 5.37 risk to reward ratio. Fantastic. Then we get another one right here. We get stopped out, right? Here, we don't get stopped out. Let's see what happens. So let's see, we got the worst possible entry price right on that close for our pivot. It goes about 1 to 2 risk to reward ratio before coming back down. So it's at if not a small profit, that's at least break even. Okay. Then we don't get any more signals. We go red on daily momentum. Okay. So then we're watching for pivots to the downside. We get our first pivot to the downside right here. So let's take a look what happens. So while this one here, we get that pivot to the downside, and then we do get stopped out right here. So we drop a little bit, consolidate a bit, then we get another signal. Pivot to the downside right there, this candle, this red one. So this one would be a stop out using those rules. Of course, you can have a small buffer as well, 1 ATR, half an ATR, something like that. And we get this one right here. So these losses we don't care about because our winners are so massive. Let's say it's the worst possible entry. We don't even wait for it to pull back a little. We continue lower. Where do we pivot up? Right there, this green candle. Then we get a 1 to 3.35 right there. It's a win. We look for our next pivot. Looks like we get a little pivot right here. So this is a loss. We get some push to the downside there. So it's either a loss or break even, depends how you're doing your management. But that was a signal there. So you'd be entering short right here or on this pullback little. So either you're going to get a little bit of profit on it or you're going to get stopped out. It's okay. So let's take a look at our next pivot right here. get it on this candle. So our entry would be on this one. So let's assume the worst entry possible, close of pivot. And then we wait, momentum, see where we pivot back up. Do we pivot here? Nope, we don't. There, that's the one right there. So this green one here. Let's see. Wait, maybe we do pivot there. Let me just take a look at the, so I'm looking at this number right up here. Okay, so we do. We have a small pivot, just barely. So it'd be this red candle right here. So that's our profit taking right there. What risk to reward ratio did that give us? They give us 1 to 7. So that's a winner with 1 to 7. And then we're going to take a loss. So if we pivot after that one down, we're entering essentially at the bottom here. So that's going to be a loss. So this is the candle that we'd be entering short on, or this one. And that would be a loss. Okay, it's fine. Then we get another little pivot right here. Also going to end up being, looks like not a full loss. So remember, we're going to be entering any pullback after the close of our pivot. So let's just assume, again, the worst possible entry, even though we'd be trying to enter a bit higher up in this candle that caused the pivot, right? So that's our setup. And then we actually pivot on close right here. So we'd be taking about half of the loss because that would be the exit right there, not a full loss. So we get out on that pivot right there on this candle where it pivots back to the upside. So it's about half the loss. So if you're risking 1%, you'd lose 0.5% on that one. This one, you're risking 1%, you make 7.7%. This one, you make 3.35%, risking 1%. So you're going to be making a lot more on the majority of winners, and most are going to be small losses or break-even trades. Now let's take a look at our green section here. So we get our green box where momentum is shifting to the upside, confirmed on the daily. Then we get our pivot right here. Let's take a look. There it is. Got my arrow in the correct place. And then we're just looking for this to hold higher than the candle that caused the pivot. And we want to enter at least at the close, if not at a better price. So somewhere in the middle range there. So you can just see how crazy some of these risk to reward ratios are if you just wait to fill limit order a little bit on a little bit of a pullback. Let's just say you waited a little bit there, just to be fair. Stop loss. And then we wait for a momentum shift. So we end up going 12 times risk in the trade's favor. And then we pivot to the downside here on this candle. So if you don't take profit on 12 to 1 at all, and you just wait, follow the strategy, then you'd end up with still a 1 to 5 to 3. Okay. So that's the close based on the strategy that I'm showing you. So we get a little pivot right here. This one gets stopped out. We pivot straight back down, which would not be a full stop out. So we're looking for an entry on this one, but this one closes with a pivot down. So if you entered on this candle after confirming the pivot to the upside, stop loss would be at the low of that pivot candle. Get out of the trade, even though it doesn't get stopped out yet. Get out of the trade with the tiny little loss, half risk essentially. So we're talking about 0.5% if you risk 1% on your trade. Get out of that one because pivot to the downside occurred there on that 4 hour. So we pivot back up on this candle. So then we're looking for our entry. Here's our actual close with the confirming the pivot. And then we want to get in on this wick here, the little pullback that happens after that close. So let's just assume it's not that great. We get in somewhere in the middle there. We want to see that hold. And then we're just waiting. Here's our pivot down on that red candle. So we still get, even on these little ones, we still get a profitable trade or a tiny little loss. This one's profitable. We get a loser here. So we pivot up, loss for sure. Pivot up on this candle. Let's see where we get out. So we take, again, we take a very small loss because we pivot to the downside right here. So we'd actually, if anything, this is in profit. So if we actually look at this setup, so this would be where we get interested right here. We want to enter on this candle, the pullback after this confirmed pivot to the upside. So we're entering here, assuming that we get in on that limit ordered, better than, at least as good as the close, if not better. And then we have our exit candle right here, because this candle, screen one here, causes the pivot to the downside, okay? So we get out with a tiny little profit on that one, okay? We're not taking big losses with this strategy. So this one, we have a couple more of these, and we have some really big time runners coming up here. We already kind of went over this section, but you can kind of get the gist. We'll keep going. So this one, we're looking to get in on that little wick that happens after our confirmed pivot, right? We go up a little, about 1 to 1.5 risk to reward ratio before it comes back down. So potential for break even, depends how you're managing, or a loss, okay? And then we have another one right here, confirm pivot. So we go long on this wick right here. So it's somewhere in that, on that little pullback there, but we're looking for it to hold. We're just assuming it's going to hold a higher low compared to this one if we're utilizing this strategy. And this isn't the only way to do this strategy. You can use the same type of system and use wider stops and different method of taking profit, but this is going to be the system that gives you those crazy risk to reward ratios because the stop is so tight. So this ends up going for about a 2.61 before we pivot to the downside here, and then it would be break even or slightly in profit. So probably break even on that if you don't take any profit at 1 to 2.61. And then here's our jumbo one that gives us no reason to get out. Entering here at the worst possible price. Let's assume that you actually did what I'm suggesting, which is not just entering right at the close, but on the little wick that follows, a little slight pullback on that next candle. And then still, you know, same stop loss to the low of that caused the pivot to the upside. We're looking at a ridiculous risk to reward ratio on some of these. This one perhaps as high as 1 to 43 risk to reward ratio, and then we pivot to the downside on this red candle right here. So we catch a massive runner, and this pays for many losses. And most of these weren't even losses. They were just break even winners. Some of these were really good wins, but no large wins. Then we come up here, we get a few more. We already went over these ones, so let's move on. Okay, continuing. So we go red. We're looking for pivots to the downside once we're in this range. So we come up, pivot down right here. So it's on this candle. So we're looking for this candle to get an entry to the short side. So again, want to get in on that wick that happens after we see that confirmed candle to the downside causing that pivot, just expecting that it's a lower high compared to the candle that caused that pivot down. So we could enter as soon as right here on the opening of this candle, or we can enter a bit higher up trying to get a better risk to reward ratio, which is what I'm suggesting here. So we're just going to be kind of assuming that it's a little bit better than that closing price, get a limit order filled. So we go a little bit in the trade's favor, don't actually pivot back up till up here. So that would be a loss, or depending on how you're doing it, maybe you go break even here, but I'm going to call it a loss there. Let's take a look at this one. So we have another pivot down on this candle. It's a big green candle. So it's kind of interesting. I'd more so be looking to get in on this one to the downside, but we want to see that this is actually our pivot here, this big red candle. A big green candle like this doesn't really give us any room for a stop loss. So if you're going to play this one, essentially look at it as, okay, we can enter here, but this is going to be the stop loss, this high here. Okay, we do pivot back to the upside, pivot back down here, get some movement to the downside, and we can kind of get moving on these. So we go green. First pivot right here on this candle, entering it at least at the close, if not better, right? And we want to see a higher low compared to the candle low that caused the pivot to the upside on the 4 hour. And then we're just going to be waiting for pivot to the downside. Do we even get it here? 61.9, 62, nope. Don't get a pivot to the downside yet. So there's no signal here then. So we're just going to be holding it still. Clearly get the pivot up here on this right candle. So we get a 1 to 4, 6 on that one. And then it looks like we get another signal right here. So before, let's see, this one right here. In our daily close, we're not going to count this one because the daily close goes red on that one. So it would be closing at the same time. So that would confirm a bearish momentum on the daily. So we're actually not going to be getting long on that one. We just won't count it. So we're red. We can get to the downside here. This candle. Zoom in. And of course, you don't need to take every signal, but I'm just showing you how even if you do, you're going to be positioned really well over a series of many trades. So at least getting in somewhere on this wick here. Don't want to see the high of that candle taken. And we end up going down, get a good, decent risk to reward ratio there. It ends up going 2.84 times in your favor. Then we pivot back to the upside right here on this candle. So I'm going to call it a break even. Go break even at 1 to 2, something like that. We don't get any more signals here. Okay, so we just go to the upside. No more signals, no pivots to the downside given on the 4 hour momentum. And then we come into here, we go green, no pivots to the upside, so there's no signals in there. We go red, we do pivot to the downside right here. So on this one, and then you can be getting in on this one. We get a small move down, but it's going to be a break even. We pivot. Here we go into green on daily, so you just close it for a small profit. So that would be just slight profit on that one. And it is what it is. You just take the tiny little profit on that and move on. Now we're green, so we want to look for a pivot to the upside, which we get right here. Getting in on this wick, this little pullback, expecting that we go for a higher low than the low of that candle. And we end up running for a big one, or we pivot to the downside right here. See right there, and we actually end up with just a small profit. So it looks like it's about a 1 to 1. So still make a percent on that one if you're risking 1%. Right there, get out. And then we actually pivot straight back to the upside. So we can get back in on this wick right here. This is our pivot candle. And then we get in on that next wick to the pullback of that. Just expecting that it's going to be higher than the low here. This one ends up running. Gives us a 1 to 6.6 on it before it comes back down, right? And so either you can take some partial profits, go break even, and then get stopped out at break even. So that's at least not a loser is what I'm going to say on that. Let's look for our next pivot to the upside right here, this candle. And it looks like we just get out at break even. So you can tell we pivot back to the downside right at break even on that. So that's break even. This one, get another pivot. Where do we pivot to the downside? Small profit on that one. So you can see that the ones that aren't big runners, because we're in a choppy environment, we start getting into this choppy environment. The ones that aren't big runners are small wins or break evens. So that's a small win. And then here, looks like we get another small win. This one here, pivot to the upside. Let's check that. Yep, that's a pivot, this candle. So we're looking to get on this little wick right here. So we do go 2.45, which you could, take partial profits if you want, but at least stop loss to break even. We pivot back to the downside on this red candle. So if anything, you're closed out for a small profit at break even, or yeah, that's pretty much the only two scenarios on that one: break even, small profit, depending on how you handled it. So we go back into red, right? So let's take a look at some of our pivots in this red section. Right here, we go red. Let's take a look, zoom in. There's our pivot. It's on this candle. So we're going to go to this next candle because we have a green candle here for the entry. As I showed you on that one of those previous examples with a bullish looking green candle, still an entry because we got the pivot down confirmed, but we're going to go one candle back for the stop loss. And then this one, we keep going down. We don't pivot back up till right here. So first we go 1 to 7.9 risk to reward ratio in the trade's favor. Then the confirmed close of it is 1 to 4, basically 1 to 4 risk to reward ratio for the confirmed close on that one. Then we pivot back to the downside right here. And we do it again here. Couple pivots to the downside. All right, come down, big move, get another pivot on this candle, go down a little bit. We pivot back up right here, so small loss or break even on that one. Good winners. More signals, pivots to the downside. Here's another one right here that could be not so great. Let's see, oops, I must have accidentally overlapped here as I was drawing all these boxes. Well, let's see, do we get any signals in here? Get a little signal right here, stopped out, pivot up here, pivot back down, small winner. You kind of get an idea of what the strategy is, right? So we have our daily momentum, following that based on the box that I drew in for what direction the daily momentum is currently going on close. And then we're looking for the pivot in that direction with the 4-hour momentum, and that is our signal. So can take a look here. No signal other than this one right here. Small loss. Close to break even on that one. Here's a pivot right there. Go down a little, we pivot back up. Small loss, not the full loss. Pivot down again, right on this candle. Gonna be a loss. Long here. Win, that's a small win. So the idea is to put yourself in that position to catch these massive moves. And up until then, you're going to be having some small wins, some medium wins, pretty rare losses, rare outright losses, but mostly just small losses, small wins, some medium-sized wins, and then some massive runners, some massive wins. So we'll just keep going through. Pivot up here, pivot down, small win, maybe break even, pivot up again, looks like a loss. Come down, pivot right here, nice winner, pivot again, nice winner, pivot down, that's a loss, pivot up right here, nice win, little win there, pivot up again here, looks like about break even, yeah, break even on that one, some good wins on this. Get a bigger move since we're kind of just chopping. So I'm showing you signals that happen in a range as well. And you're about to see over here, during this part of the range, we get some huge wins. Over here, we get the 20 to 1 twice. some really, really massive wins throughout this over here. I'm just going to keep going and just show you so you can see for yourself just how effective this is. We're not going to be taking big losses. So we get pivot right there on this candle. So ends up, let's see, does end up getting stopped if we're using the rule. As again, what I told you is these signals are great signals. All of these are good, even though I say this one stopped out. That is not a bad signal right there, clearly. But I'm just going based on what I'm talking about with the specific rules. But you can modify. This is not something that's you need to follow it exactly how I'm showing you, but I'm just giving a suggestion of a system that helps catch huge wins with great risk to reward ratios and keeps the losses small and minimal. And often just small little wins, medium break evens, and small losses. And then you get these huge runners with massive, amazing risk to reward ratios. Let's take a look here. Signal looks like it is about a break even. Then we get this one. It's going to be a nice, good win on that one. Good win on that one there. Pivot back up all the way down at the bottom right here. So almost getting the exact bottom from this one here. Shorting on this candle. And then exiting down here. No more signals until over here, where we actually don't get a single. There's no signal in that green. Let's check here. Get a signal on this candle, but we pivot back. It's about break even on that one. Break even. We pivot back to the upside. We go down. We pivot back up. It's really going nowhere but sideways. So we get up and down in the pivot. So we just break even a couple times in there. And now we are going up. Okay, so we're green. A couple break evens there on the losses, or break evens, not losses. All right, so we get our pivot on this candle here. And remember, we want to enter at least at the close of the candle that causes a pivot, if not better. We want to get on that little wick. So as I've been saying many times, notice how when we get that pivot, there's a little wick that goes on the next candle after the pivot confirmation. Okay, so we want to get in on that wick, on that little pullback that happens on a lower time frame into the center of this candle that caused the pivot. Okay, gives us a much better risk to reward ratio, right? So then we ride it. For our condition to be met, we're waiting for the pivot down, which we get, see, right here, this candle. That's our pivot. So that's a 1 to 13, which paid for any little tiny losses that were taken and more. So let's look at this next signal. Next pivot to the upside. This candle here. So we're getting in on that little pullback that happens after in this area, this candle. Stop loss to the low of that candle that caused the pivot confirmation. When do we pivot back down is the question, which right here, this one. So it's a small win, still a winner. Majority are winners, most are small winners, break evens. And then we go pivot again right here. You go up a bit. Go down. It's about, let's see, looks like it's a bit of a loss. Yep, looks like a bit of a loss on that one. It's a loss. And then we go here, pivot up again on this candle. And we're looking to, let's see, pivot this candle. So we're entering on this one. Looks like we might have taken out the low there. So this one gets stopped out right before we get our big run to the upside. So as I was saying earlier, little buffer on these. Okay, said that multiple times now. A little bit of a buffer, half ATR, do what you want, but or you just take the loss. Okay, so you're entering in this area. You're saying, okay, I have the potential here for a 20 to 1, something really insane, but yeah, get ticked out right there. So, you know, you might want to back test this system and then add a little quarter of an ATR stop buffer below that candle, or not. If you want to just go for maximum risk to reward ratio, it's still, you know, it's going to be fine either way. So we'll just say that it's a loss. Missed out on the 1 to 20. It's fine. for a pivot here. It's a loss, clearly a loss. Get a pivot up right here. And then we're going to take a small win because we go red. So it's a small win on that one. We take a short here. Small, looks like a small winner. We just close it because we go green on daily. So small win on that one as well. Pivot up there. We end up taking a loss. Looking for pivots to the downside. This one's a short. Small win. Break even. Something like that. This one, probably a loss on that one. Another loss. Pivot down. And we go green on our next pivot. Or does it happen before? Okay, so we can short here. Then it goes green, so we just closed it for a small loss. Not a full loss. We have a long here. Go looking to get in on that wick there, down for a long. And then we start coming back to the downside. We pivot on this candle, so it's a small win. That's a loss. Pivot up. Get some upwards movement here, but we eventually come down. So break even or a loss. Let's see what type of risk reward ratio we got. Pivot here. So we get in on this wick here. It's a really tight stop. So we actually end up getting a really good risk to reward ratio before it stops us out. 1 to 8. So that's definitely a break even. All right, no more signals there. So we're going to be looking for shorts now. We're in the red. Here, stopped. Here, big win. So we get pivot down, take a little loss here, then we pivot down again, and then we go entry, stop to that candle. And we keep riding it until our momentum shifts, which happens down here on this green candle that goes to the upside. So it goes 1 to 20 in our favor. And then our confirmed close is 1 to 12 right there, using the strategy I outlined. Doesn't mean you have to do it that way, but so here's our next pivot. That's the candle we look to enter on. We wick it a little bit. So again, we're just going to call it a loss because we wick it out before going in the trade's favor. But as I was saying before, I said a few times, quarter ATR stop above, half ATR stop above that is okay. If you want to try out different ways of doing it, we'll just call it a loss here. Another one, just going to call that one a loss. Goes straight up, wicks it. It's a loss. This one, pivot down on this candle. See if we get anything out of this as far as stop loss to break even goes. Oh, it's this candle. Oh no, this one. This one here. Okay, I was right. So we're getting in on that wick. We end up going 1 to 3 in the trade's favor there. So that's definitely a break even, if not a small win. Next one. Pivot. Getting in on this candle, this little pullback here. Break down new lows. 1 to 1.6, come back a bit, pivot up a little. So it's a small win. This one here. Pivot on that one. So we're getting in on this little pullback here. Stop loss to that candle that caused a pivot. Go down. Pivot back up. It's a winner. So we get a win on that one. We close it because momentum pivots back to the upside. But small winner still. Here we get a big one. So we get that signal, pivot to the downside, enter on that little pullback. And then stop loss to the high. Keep going, waiting for the momentum to shift on this one right here. So first it goes 1 to 20 in our favor. And then by the time we actually get the confirmation to close, we get a 1 to 10. So that's the confirmed 1 to 10 there. Get another signal, pivot to the downside. Over here, not sure what this is doing. Right here. Looks like we pivot back up right here, so it's a small loss, about half a percent. Okay, now we're into long territory again. Okay, so we long here. It's actually on this candle. And then we get another pivot right here. So let's take a look. How did these work out? So we get in on that little pullback, just better than the price there. We pivot down again. It's a small win right there. So we're out, small win. We get back in on next pivot to the upside. This candle is our entry. So just looking to fill a limit buy on this one as it pulls back a little bit there, expecting a higher low there. We take off. When do we start shifting back down? Not until over here, this one. So that's going to be a good win, decent win, 1 to 1.4. Mostly small wins so far, break evens and big winners, not a ton of losses. And just one big win pays for every single loss plus more. So let's keep looking. So there's no more buy signals down here. We start looking for a short. So we pause momentum there, pivot. Here, we go down. Remember, we want to get in on this candle on the wick here when we pull back a little bit. So it'll be on this area, fill a limit short. And that's going to be a win, if not a break even. Actually a win because we confirm the pivot to the upside, still in profit there. So we go 1 to 2.6. The idea isn't to just copy exactly what I'm saying to do, it's to just see the potential with this, okay? So can you not see how this puts the odds in your favor, gives you amazing setups more times than not? Okay, here's our pivot right here on this one. So we're looking to buy on this one, but we get taken out. It's okay, that's a loss. Here's our next one. So we get in on that wick, the little pullback that happens. And then we wait. Here's our pivot. So we end up going 1 to 7 almost, 1 to 6.7 in the trade's favor. Then we get our pivot confirmation there for 1 to 2.5. If that's what you want to do. I'm just giving suggestions here, just showing you what can happen. Okay, we go up. So we're getting on a nice little wick here. Go in the trade's favor. 1 to 2.4. We pivot back down. Let's see, right there on this candle, which takes us out right away. So break even. If it goes 1 to 2 in your favor, you better be break even at that point. Okay, so that's a break even. So that's all the examples. We just went through all of the trade setups throughout these ranges, and if someone wants to, they can go and total the wins, the losses, and get an actual percentage figure to see how much you would have made by trading all these. Actually, you know what? I'm going to do that. I'm going to add that to this video right now. So I'm just going to stop recording right now. I'm going to do the totals on all of those, see the risk to reward ratios, how much the losses were, assuming a risk of 2% per trade, which is pretty standard, especially for a 4-hour to daily type of strategy. So we're going to assume a 2% max risk on each trade. If it's a full stop out, that's minus 2%. And then we're going to see how much would have been made, assuming we took every single one of these signals in the way that I described. Okay, so let's see if this strategy is profitable or not, just the way that I showed it here. All right, so I did the testing and have all the numbers. I realized the video is 48 minutes long, so I'm not going to get into all the details. I can tell you that it had very, very good results. This is the most profitable strategy that I have tested, and it didn't take very long to get the 100 signals. So I did go back a little bit farther, do 100. You can see how many risk to reward ratio tools I have on the chart right now, but I just did all the testing. Really good. So we have 2% risk, not 197.04% gain on the account, 41 losses, 41 wins, 18 break-even trades. I did the average on the average win. It was like 3.22 or something for the average winner, 3.22 times more than the average loss, something like that. I'll get into all the exact numbers in the next video. I'll make a separate one for that because this video is so long and almost no one's going to get to the end. So I'll do a full video breaking down all the details of every little number. It took me quite some time to go through and see the exact numbers of all of these trades. So hit the like button if you enjoyed it. And just remember, you can do what you wish with this. This is a, if not anything else, a decent filter for trend direction. So if you don't want to use this for your entry signal, you don't want to use the stop loss I use, don't want to use the take profit method, then figure out something that works better. That's what I love. I love to see people constantly finding new things that are better, improving it. So that's what I do as well. This was the first run at this, so it can only go up from here. Now, that's it for this video, guys. Thanks for watching. Don't forget, if you want a trading exchange, crypto exchange that is allowing US customers, Bitunix with the exclusive event, limited time till the 31st of July, and then also BingX with the event that they're giving right now as well for the trial funds when you make deposits. So check out my links if you want to get this indicator, Trade Pro, TCI plus BOP, plus a few other indicators and many trading scripts. You can check out my Patreon and subscribe over there if you want. Thank you for watching. Have a great day.